The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Man, what a day yesterday. Expected, and some things that I expected didn't exactly happen that way. So we're going to go through that. As far as some of the moves in the treasuries and the S&Ps, the dollar, we're going to look at some other currencies, what happened with that scene. And this is the 10-year. So, had a little. This is something I actually didn't expect. Just kind of had a reversal back up in the box, back above 23.10. Not a massive move. This is our weekly view here, but here's the daily. So kind of completed the fair auction, the top of the box up there, and just kind of came down. But I would consider this still the kind of the noise area on the weekly. I mean, this is unfortunate for me. I got stopped out of this trade. I thought we'd rally back up into that area and then try to trail off. But we're just kind of hanging above this long-term weekly, very prevalent, most important inflection point that we need to pay attention to, 123.10, rounded off. So as we look at this, what do you do with it now? So, at this stage, I'm actually more partial. Just kind of let's see where we weekly close. I still think we might actually come off and get back down below that 123.10 area. So, again, we raise rates, and treasuries have a little bit of a relief pop there. Let's take a look at gold. Let's just see how this thing acted. We had talked about gold trying to trade this from the long side, and a lot of times we'll talk about trades. I mean, I may be 50% correct, but I think we do a little bit better than that. But the name of the game is to play the field, and trying to kind of back the truck up into one particular instrument, one particular trade, that's never a good idea. So, looking at the 10-year, had a little bit of an issue on that one. But we talked about gold too, so, let's take a look at inflation fears on this one, along with a couple other things, and try to bank some trades against this 1200 area. We are way past the unfair highs, and that 1236 area is probably going to be your target area for this particular instrument. So we've closed below, we've retested, we might go back and retest here. But right now you can move your stops up. 1217's new support on gold, so we are buying that area, and we're taking off at 1236 on gold. Let's take a look at crude really quick. All right, so we kind of talked about waiting for this to get back above 48.67. That's happening now. Weekly close above here will be awesome. Then that will be massive support. So same kind of situation as we've looked at a lot of different reversals back up in the box. I'm not so sure about the 10-year. I don't have any deep convictions about that particular instrument rallying right now. But crude, this is the type of action you want to see. And I hope we can go back and retest some lower areas, namely 48.67. That DMZ is going to be 48.67, 47.76. A lot of support down there on crude. Here's the situation on the daily on crude. Very eerily similar to that 10-year kind of daily, weekly situation. But right now you just want to see it hold its ground. The VIX has just got pummeled. The dollar. So, I'd talked a lot about this particular instrument, trying to revisit at some point 99.63. It looks like there's nothing in the way for that to happen now, finally. So we kind of dive back in the daily boxes. We get below 180. That was the targets for a while. And I think the ultimate long-term trade's at 99.63. I actually think we can go a lot lower. So I think this is kind of showing hints that may actually happen now. Yes, and the chickens are chirping over here. Still got about 20 trying to get out the door, but it's 20 degrees outside, and I think that'd be a death sentence, Duffy. I know it will be a death sentence. How about that? So we're holding off on that. Let's take a look at the euro. Here we go. All right, so I hate the euro. Anyway, the dollar helping this particular instrument go up without question. Kind of similar trade, actually, being short the dollar along the euro. So we gotten up into the fair auction on the weekly, and this is kind of where we're headed now. It's okay to be long, not okay to be short the euro. That's been the case since we crossed the borders at 105.80. Test. Okay. So what do you do with the euro now? So we've hit the targets up top on the daily, and now we've kind of closed above and are actually using it as a new support area. So 107.05, just like the dollars that kind of short for a little bit longer down in the 99.63, we've got the euro now kind of up in the ether here, and supports 107.05 on the euro. Let's take a look at the British pound. Man, John from Philadelphia is so right again. I was terrified to buy this down here, 121.45. Kind of passed on that. That's what I get. Anyway, we're coming up into some resistance here on the British pound, up into that POC. That was a really big deal before. If you remember, we were kind of compressing, never actually had a weekly close above this 125.39 on the British pound, but used that POC quite a bit. That's going to be some targets here on the British pound right now, 123.81. These are all literally within this product, the scanner. You're going to get all these inflection points. Here's that number 105.85. I mean, you can just basically see these things. There's the support now, 107.48. You can see where let's get the euro up here. You can see where the level of the market is here relative to all these profiles at once. I like this view a lot. I've never seen this displayed anywhere else on any other platform. It's just kind of nice to see where the market is relative to the profiles on those multi-time frames. And here's your chart, obviously. Aussie dollar, we're going to hit that really quick. Let's take a look at e-signal when it comes to this. I've been a huge fan of trying to stay long the Aussie dollar and trying to find or block out the short side, try to find areas to try to pick battles with it. 75.39. Again, this week, a big move up in the Aussie dollar, and has eclipsed some new areas that we're going to have to pay attention to and talk about when we come back, folks.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. We were talking about the Aussie dollar. Excuse me. And I guess the question always is, what do you do with it now? Okay, the move's kind of been made. We've blocked out the short side on this particular product, and sitting around the highs here, the dollar. Actually, this is not one of the components of the U.S. dollar index, but I don't think anybody on the globe here is anybody's currency is unhappy about the dollar coming off. So put it that way. So let's take a look at something that usually has a bearing on what's going on in Australia. Let's take a look at the CSI 300 really quick. We talked about blocking the short side out on this one too, and ultimately this reaching back up into target, so 35.21. If you're trading some China A shares, ETFs, I look at this to trade those. I mean, this is the broad index itself. So if we're looking at this now, I think it's a foregone conclusion that this particular index will go to 35.21, and it could have a weekly close even this week above that area. And the Aussie dollar wouldn't mind that, put it that way. All right, so let's keep hitting the currencies here. Japanese yen, obviously, pretty well connected to what's going on with the U.S. dollar. Here's the weekly, pretty wide profile here. We've got to pay attention to those POCs. You guys watch this show. I'm not just again saying, oh wow, look, it bounced off the blue line. When there's a wide POC, our automated trading systems look at these particular POCs and pay attention to them. They also try not to take breakouts outside of wide profiles, because those breakouts usually can be failing opportunities instead of successful opportunities. So one of the things that we do is when you have a really thin profile, like let's just take this one or this one on a relative scale, looks back at the kind of the average of the last 10 profiles, and it will weigh heavy, a little bit more heavy on the breakouts outside of these thin profiles, or use those inflection points to double up. So when you have a wide profile, again, you're trying to use almost range trading opportunities, if you will, off the POCs, the unfair lows, and the unfair highs, because they're just historically, statistically speaking, a better way to look at those and those inflection points. So that being said, that particular blue line is a pretty big deal, to put it mildly. And then just like the dollar, that 99.63, I think 111.67.68 could be hit on the Japanese yen still. We've got some good technical damage going on that happened here on the intermediate, and I really don't see anything in the way of that happening. And I think the dollar actually could go very sub 100, so that yen's going to get stronger at the same time. Get stronger by actually the chart turning south. Let's take a look at the Chinese currency. All right, here we go. All right, this is the yuan, and here we go. So still, okay, so this is the daily. We just looked at the weekly. So if you're trading this, it's a peg currency, but 6.878 is going to be a big support on the CNY here. I don't really trade that product though, because it's no telling what somebody can do overnight and could crush you. Kind of like the what was the thing that FXCM got caught up in? Which currency was that? The Swiss franc that buried this, guys. Didn't they get in trouble and banned from the business lately? Is anybody? I thought I read something about that they got banned from. Somebody can type up FXCM. I think they got banned from the business in the U.S. or something like that. Got caught trading against. But the way, if you guys don't know this, the way Forex companies usually work is they trade. They basically trade against their customers' inventory, so to speak. And I don't know why they got slapped on the wrist. It's like a industry standard, basically. I'm not just telling stories here. That's actually true. All right, so the Nikkei, we've talked about this one getting the ultimate pop, compressing up into these unfair highs. I mean, this is no mystery. Take the profiles out of the equation. The Japanese, the Japanese market, the Nikkei. I love to see this type of action. Then you feel really, really good about buying the breakouts above 19,680. But there's no reason to do that until that happens. So it's just kind of put your resting orders up there on a OCO type basis. If that initial order gets hit, then you kind of got the stops and the targets in place, and you can put the targets pretty far up there. I mean, you don't even know where those targets need to be right now. I'd actually put them previous profile highs back in fall of September. Excuse me, fall of 2015. So that's kind of what I feel the Nikkei is capable of doing. So we'll keep our eye on that. Let's take a look at the 30-year. All right. So 30-year, pretty good move here on a relative scale. Still hasn't. This is another reason I'm not super excited about the 10-year right now. And you guys heard me in the beginning that I'm just going to consider that a little noise. There's some things that are going on with the administration that are probably going to continue to kind of relax things. Good for the economy. Regulations, destroy them. I think they're talking about taking off a lot of coal. There's all kinds of deregulatory type things going on. But I think the 30-year literally has given you a shot, believe it or not, to short this again. And that's why I kind of think the 10-year could get back down below that 123.10 area, and a weekly close below there would just kind of put the writing on the wall that these are continuation patterns, just kind of backing and filling, giving you shots to short this again on the treasuries. All right. So let's keep going down the list of the usual suspects here. I want to pull up GoPro. This thing actually Dave White and I have our retirement fund centered around this particular stock. I'm just kidding. I'm just joking. All right, so had a pretty big move in this. Talked about, I think it cut $200 million in overhead a year or something like that. I don't think that's going to help things overall. I mean, this company's doomed, in my opinion. Overvalued still. So trading 812 this morning, but guess what? The big retracement to kill it again, short the heck out of it, is around 874. So it could squeeze some people here for a while. 874, I'd try it, and then I'd try it again at 1030 if that didn't work. We'll be right back.
TFNN has just launched a special event in Tampa with Tom O'Brien taking place March 18th, sponsored by Nadex. Tom O'Brien will be presenting 2 workshops for a combined 2.5 hours of education, bisecting and dissecting his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. March 18th kicks off with a continental breakfast as we get everyone checked in, and that is followed by 2 75-minute workshops with Tom O'Brien. The first workshop from 8:45 until 10 a.m. will cover quality volume, cause and effect, and ABC structures, and the second workshop from 10:15 until 11:30 a.m. will cover swing points, testing, and the Tiger Gartley. Tom will then wrap things up with a question and answer session, which will be followed by a Tiger Luncheon Social on the rooftop of the Westin Hotel. The best part is that it's all free, but you must register to attend. Visit the front page of TFNN.com for all the details and to sign up today, and we hope to see you in Tampa on March 18th.
If you're looking to unearth a new financial resource and diversify your financial portfolio, consider the new Market Safe Core Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 4 equally weighted commodities: gold, copper, WTI oil, and sugar, in one powerful CD. With no pricing caps, you can potentially earn an unlimited upside payment at maturity if the commodities increase in value across semi-annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. With certain commodities on the rebound, now is the time to take advantage. The March 23rd funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once more, that's 1-855-750-4051 or visit everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. Okay, here we go. Sorry about that. Let's take a look at a couple of stocks. Let this server reboot here. Sorry about that. All right, here we go. Let's take a look at the XLF. A lot of banking stocks we want to take a look at relative to rate changes going on. So XLF, again, you talked about waiting on this. You have a new profile attempting to appear. Would just like to see that. This is one of those wide profiles I talked about before that we usually don't like to trade those breakouts. This one, just kind of like the Japanese yen though, or excuse me, the Nikkei, we kind of had that compress, not wanting to stay away from it. Those are kind of different situations when it comes to a wide profile. Now you're going, hey, wow, Logan's curve fitting again. Here we go. But this is that compressing up into that profile and not wanting to get away. We talk about that type of action all the time. This one happened to be on kind of recent all-time highs. So you got to take that for what it's worth. But we talked about, a chance for a new profile long-term to happen. And that usually has some historically, statistically, backtestingly wise, usually has some backing and filling involved in it. So, not really super excited about buying the banks. Here's JP Morgan. This is like death to try to short this particular stock. Let me get our daily up here. I don't know why it does that. So JP Morgan, again, with the kind of the similar situation as the XLF. I mean, and this is why you don't short this. It just, every time you find an opportunity to buy support or buy the breakout or buy retracements, this thing seems to just magically happen. And these guys have the edge of edges. They control Congress. Jamie Dimon's sitting there too. And they just pay fines and move forward. Anyway, JP Morgan. So not probably the best time to buy any of these supports right now on the daily on JP Morgan. And we just want to wait until we see a new balanced area happen here. All right, let's take a look at my favorite company on the planet, Wells Fargo. Can I say bastards on the air? Anyway, here we go. Let's take a look at this one. This is our weekly kind of rattle proof here. Trading, let's see, this is a real print, 58.85. It's about where we closed yesterday. So I feel like some of these banks could actually come off a little bit based on that XLF action. Wells Fargo not showing any hints of that, but not really showing a lot of launching pad moves lately. So we're going to just kind of keep our eye on that, wait for some new information on that one. Let's take a look at Citigroup. All right, so this is our weekly here, and this is kind of interesting. Again, you got better shorts out there than the XLF sector, but again, I think if you've been long, it's time to just kind of back off some of these longs on the banks. Let's take a look at Bank of America really quick. Again, we're looking at these because the rate scene. Now, here's something that the city of Charlotte's crown jewel, Bank of America. Here's the daily. So, a lot of these banking stocks could retrace back. I've talked about that, but I mean, it's a little bit more of a scarier trade. Having the XLF put that stake in the ground would be helpful, but Bank of America kind of shelving off here on the daily could see some technical damage here below 2509, but until that happens, I wouldn't mess with this whatsoever from the short side. I just don't think it's time to buy support anymore, put it that way, even though we're sitting on support. So this is kind of a pass on the longs right now. Good old natural gas. Let's take a look at this one. All right, so we had the reversal a couple of weeks ago, back up into the box, talked about, trading this above, on the long side above 2.74, reached the targets this week up top, and now we're coming back down into an actual support area here. And the thing with this one is we had this profile up here below price action. I actually think this is kind of and let me just see where we're at this morning, 29.14. So we're right there at support on natural gas on the long term. I'm just going to blow this chart up so you can see it. Here we are. Okay, so might not be a bad, I don't trade natural gas, it might not be a bad place to pick a battle there. All right. Let's Let's take a look at May beans. Now, here's where we're at. So we've kind of reversed back up above 10. I was trying to play some pops there. That was a little bit too deep for me to stay in that trade, but right now, weekly close back, kind of reversal weekly close back above 10. Again, 10's a big whole number for this product. I mean, I'd love to hear some fundamentals on this from Jonathan Philadelphia, what his, if anything's changed. But again, your targets up top will be 10, 22.5 on this particular instrument right now. But I kind of would love to see a weekly close just back above 10. That would make me feel like, okay, we've all decided that we need to stay above 10 for a little bit longer. I'm not super high on this thing staying above 10 long term, but you might have a trading opportunity here. Let's take a look at the utilities, because obviously, wow, these are okay. So this week had a profile appear below price action on long term on the XLU. Got some great opportunities within this sector. We talked about buying this a couple of days ago around 50.59 and targets at 51.64. I need to remember to breathe in between sentences. And so we met 51.64, and we're probably going to, we've got to close above there. This is pretty interesting to see this happening right now. Really wild. So we had the weekly profile appear below price action, which is always a really good bullish sign. And you had at the same time a support area at 50.59. So we've met the targets. I think this trade's kind of over right now. This might be a little bit of a squeeze up here. So you want to wait and see where the weekly ends up here. Targets have been met. So 50.59 into 51.64. I know that's not an earth-shattering move there, but for the utilities, it kind of is. Let's take a look at the XLE. All right. So didn't quite get down to that number we talked about this week, 68.14. We've reached a low of 68.62. Got pretty close, and had just kind of taken off. So yesterday morning, we talked about this. Didn't exactly get down to that pressure point down there, but popped pretty well with a little help from crude. Guys, we'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi guys, welcome back to the show. So I went to breakdowns on the scanner. We actually tightened up some of these sorts so they distill even better. Lo and behold, if after yesterday, if you're looking at some stocks that actually broke down, these are definitely ones that are saying, hey, I'm the worst publicly traded company around right now. Kohl's is one of those, obviously, brick and mortar type. Just cannot really. Hachi mama. Okay, so just so much against these stocks. We've talked about them. It's like whenever I lose a trade lately, just always go back to the brick and mortar retail sector and get a couple of wins in really quick on the short side. Here's Kohl's. So 40.08, the new level to bank against on the short side, just like 43.27 was before. Let's take a look at a couple others. I always go back to some of these stocks for immediate wins. Target, we talked about this one, just zero reasons to try to trade this from any other side than the short side. And I know that's like, wow, thanks for putting me in a short in the whole situation. But, I think Macy's was mandated by their largest, I read something about this last night, mandated by their largest a fund that basically told them to start separating out the real estate from the store itself. And here's Macy's, and you look at this is another sick situation here. God, I just feel sorry for these guys. There's got to be something somebody can do for them. JCPenney, again, here's the weekly on JCPenney. Just, the long-term lows over here, 490. I just don't see how that won't be a foregone conclusion hitting that. Let's take a look at another huge winner here, Under Armour. Here's the weekly on Under Armour. Remember we talked about this, just, try to stay away from trying to pick these things up on so-called sale. Still the case. I mean, this is just incredible. Let's take a look at Tesla. All right, so 263.47. This is kind of where we're at here. Big up move. Talked about that weekly on furlough, 241.53. Met some targets already on the kind of the rally off of that 241 area that weekly on furlough. But right now, I can't bring myself to go long this. So this is kind of a wait and see right now on Tesla. Coke, still like this from the short side we've been talking about. I think it's a pretty low risk trade. I don't like the way it's kind of staying around this unfair high on the weekly, but the market kind of, showing it that it doesn't want to even surpass recent weekly highs. I still think 40.51 is a pretty easy low risk trade with stops above 42.40 on Coke. Let's take a look at Johnson & Johnson. This is kind of the polar opposite trade, only taking longs. Wow, that's a heck of a move there. This is our weekly on J&J. So hadn't given you really any reasons to get out. We had some hints of new profiles appearing, but they kind of disappeared. That's amazing. Amazing situation. A couple other stocks that were kind of breaking down. We talked about Alexion Pharmaceuticals yesterday, in fact, AXLN. Here's the weekly on AXLN. Here's the daily, just stocks that aren't participating in the recent rallies. Let's take a look at CVX. All right, I don't know why that's not coming up. Let's go to another machine here, CVX. Let's see. Why is that not coming up? Well, let's try another one here. JB Hunt, JBHT. Here we go. All right, so might want to keep your eye on this one. A little bit of a breakdown here on the weekly. 95.70 is a big number. If you're going to try to trade this from the long side, we've got to get back above there. Don't see a lot of edge in that stock. Just kind of going through some of the NWSA. Let's stay away from that one. EVHC. Let's take a look at this one. EVHC. Now we're going to stay away from that one. Let's take a look at this downtrend resistance short. All right, so here's some ones that kind of have possibly moved back up into some resistance areas. Let's take a look at Lockheed Martin and IP. There we go. All right, so here's Lockheed Martin. This is, I wouldn't, not in a million years short that right now. Here we go, IP. All right, so IP is something I would just kind of wait until we got back above. I like this stock a lot, back above 51.40. I think we just got to kind of wait and see. If it doesn't happen, it doesn't happen. At least you save yourself some pain on going long, but sometimes you got to buy things higher. Let's take a look at Constellation Brands, STZ. Pretty big move yesterday, no doubt about 162. So this is one that looks pretty attractive to me, actually. You know, we've kind of gotten ourselves righted a little bit here, but we're back up into an area where it's pretty big resistance at around 162.89. So any type of market pullbacks, I think you've got a chance, a decent risk reward on this one. And the risk reward is targets down below at 157.12 on STZ. All right, just a couple updates for you guys joining late. Dollar, still think we can head lower here. The long-term MO on this one was to revisit 99.63. Keep that in mind. We're looking like, you know, starting to have some technical damage here, but got the targets met at 180, but we obviously closed below there yesterday and not really wanting to bounce at all. So 99.63 is your next target down on the dollar. I think we can actually head lower than that. Let's take a look at IBM. And we're going to be right back. The trade on IBM we talked about a couple of days ago was to trace back up to 79. Some bid. Targets on this one 72. We'll be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi guys, welcome back to the show. Here's the NASDAQ chart. This is the daily. This was a little bit leader of the S&Ps, of course, making new highs. A couple of days ago, hadn't really backed off at all. Here's the weekly in the NASDAQ. Oh my God, how did that happen? What did I do? Let me see if we can get this back in order. Don't know what I just clicked. Ugh. All right, so anyway, here's the weekly on the NASDAQ. Just zero reasons to be short this, of course. Let's take a look at the gold situation. Gold's getting, it has, let's see, it reached a high of 1234. So if you've been long gold, I think that, and we talked about, God dang it, that really is disturbing. How do I get rid of that? Okay, there we go. Whew. All right. So we're kind of reaching some targets here at 1235, 1236 on gold. We had a little bit of a yesterday, we talked about looking at that 1200 area to try to base some longs off of, reach the targets, and then some. But right now, you've really reached the ultimate retracement back up into the 1236 area. So that's something you got to really, really pay attention to. Crude, I'm just kind of waiting to see if we have a weekly close above 48.67. This is kind of a wait and see for me to get a stake in the ground. On the S&Ps, just do a little bit of review here for folks joining late. That situation yesterday kind of rallied things, plowed back through 2371. That's going to be your support now. Breadth calculations are pretty positive on the scanners. Treasuries, I think these things can head lower. The 30 years kind of out of area. You could look at it that way. And the 10 years just kind of waiting until we get hopefully a weekly close back below 123.10. This is the 30-year situation on the weekly. Kind of rallied back up into former support, now resistance. Weekly unfair low is 148.29. Reached a high this week of 148.20, so got pretty close to it already and backed off. I really think that this is still something you got to look at from the short side. I know a lot of people on the same side of the trade on that one, though. Copper. So we had talked about trying to catch a bid down here at 2.57778. I think 2.7529 is at least going to happen on this, maybe even higher on copper. So it's kind of a good idea to wait for the market to come to you on some of these inflection points. Silver, we're just going to hit that really quick. Man, what a climb. I was a little bit more happier to trade gold though. Silver, that 170102 area, had to get back above here, but gold is kind of reaching its targets right now, so you got to remember that when trading silver. Let's take a look at Amazon. Here we go. All right, so here's the drill on Amazon. This is the weekly, just spinning around here on these unfair highs on the weekly, which are at 847.21. This is a scary, scary looking situation to short. So do yourself a favor and try to stay away from that side. Guys, we'll be back tomorrow. Stay tuned for Larry. He's next.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.